In today's metals markets, I want to focus on gold to start the week. Gold experiencing some further selling pressure today. We saw a significant amount of selling pressure on the open this morning, actually. So it seems like there was some pent-up selling pressure over the weekend. And when you look at the activity, possibly some sell stops were triggered in that initial wave of selling this morning, pushing the gold contract down to 1448. We did see it bounce off that level. It was basically a quick selling squall, and then we saw it bounce back into the middle of the range, right around the 1457 level, but that's still down on the day, so not recovering back to where the levels of Friday's close were. And when you look at the activity here, I think you got to look at the technical selling that's taking place right now. We continue to see downward pressure on the metals in general, as we see, again, the repricing of assets across the globe. And even today, when you look at the expectations, we had some data come out over the weekend about the trade situation, and that continues to kind of play into the market. And again, now the tariff rollbacks might not be as extensive as what the market had hoped for. So we're seeing, again, expectations shifting in that dynamic. We continue to see the dollar maintaining the upper end of its range here after some selling pressure a few weeks ago. So I think that's another factor that has to be incorporated in the pricing of gold. But also looking at the data points that are going to be coming out this week, and also the Fed. I think those are two key areas for gold as we move through the week. Now you have several data points this week. CPI, PPI, retail sales throughout the week are going to be big. We have Fed testimony from Chairman Powell on Wednesday, I believe. So I think that's another factor. And even though the bond market was closed today, I can tell you when you look at the bond instruments that were trading, the ETFs based off of some of the government bonds that are still trading today, even though the bonds are closed, it does appear that if things continue the way they are priced, that we're going to see rates even move higher tomorrow once they're open again. And with that, that's another factor here that I think that's influencing the metals markets as we continue to see rates pushing back up to levels that they have not seen for several months. That's another headwind for gold, another headwind for the metals, and I think that's also why we continue to see this downward pressure in the gold markets.